I'm Phil Shea, and I'm the mortgage loan originator here at Alternatives Federal Credit Union.
And I'm Bea Nellenbeck. I'm the mortgage loan underwriter here at Alternatives.
Say, Bea, do you remember when you bought your home?
I do. It was a really exciting time, a little stressful, a little confusing.
Yeah, I think there's a certain amount of stress that is inherent in the home buying process and in the mortgage process.
Yeah.
But I also think that there's a certain amount of stress that can be avoided if you and I are doing our jobs properly.
Right?
Maybe we should talk just for a minute about what it takes for somebody coming in to get mortgage ready and ready to buy their first home.
Sounds like a plan. Well, I think one of the first things to mention is employment history and income. So we do look for consistency when it comes to employment. We want to make sure that you've been at your job for at least 2 years, or at least in the same field. So if you've switched jobs, we look to see that you're in the same field. And then we'll take a look at your income, your gross income, and compare it with your monthly housing expense. So that's going to be the mortgage payment, the property taxes, and the homeowner's insurance. And we're looking to make sure that the comparison of your income to that expense is affordable.
Sometimes even a mortgage lender might say to you, you can afford this much, but no, that payment's not going to work for me. Another thing we like to look at, and you can imagine, is credit. And some people think, oh, credit, this is a big scary thing to talk about, but it doesn't necessarily have to be. Basically, if I could simplify this, we look to see that you've established some credit and that you've been maintaining that credit. And what that looks like really is that you've been paying your obligations on time and that you're keeping your revolving or your credit card balances as low as possible. Now, some people, they don't have a lot of credit history, and that's okay. If you've been living in this world for an extended period of time, then you've probably been paying rent, maybe a cell phone bill, an internet bill, and we can look at those alternative credit sources as well.
That's right, and we also know that life happens and there's ups and downs. So you might have a late payment or two on your credit, or even some items that are considered derogatory, like collection accounts. If that's the case, we're going to want to start with a conversation, understand sort of what happened, and what steps you're starting to take to deal with those credit issues. If you don't know where to start, one of the things you can do is come to Alternatives and see one of our free financial counselors, our credit counselors. We do work with the counselors here in the mortgage department as people work to become mortgage ready. And again, creditworthiness is one of those big pieces.
Another thing we look at is savings. This would be the savings that you have that would go toward a down payment on a mortgage and closing costs. There's a myth out there that people think you have to put 20% down on a mortgage, and that's not necessarily true. There are a variety of mortgage products available and programs for people that might be buying their first home to help them with that down payment and those closing costs. Here at Alternatives, we have mortgage products that only require 5% down and sometimes less depending on what programs that you're working with. So really, you should come in and have a conversation with us, and we can talk about those programs and the different products that are available to see what fits your needs and really the place that you're in right now, and try to get you into a home.
Bottom line is, if you have questions on what it takes to become mortgage ready, give us a call, come talk with us, and we'll look at your particular situation and work with you where you're at. This has been your financial wellness tip for the day. Thanks.